and you are now on Facebook Live with Low Income Taxpayer Clinic. We're going to wait a minute or so to start our presentation. Hold tight, you're in the right place. We have a typo. It's okay. We're human. We'll correct that typo. We're going to talk about the IRS's Back to School initiative in a few seconds. Hello, welcome to the Low Income Taxpayer Clinic's Facebook Live, brought to you by Legal Aid of Arkansas. My name is Jennifer Gardiner, and I am the director of the tax clinic at Legal Aid. We represent low-income taxpayers in their controversies with the IRS. We also educate taxpayers in their tax rights and responsibilities. If you have a question at any time during this brief presentation, please submit it to us right away on Facebook, and we will get our panel to answer it here live. You can also put a question in even if you're watching this on a recording. Today, I have R.G. Earnest, the newest addition to Legal Aid of Arkansas and an attorney with our Low Income Taxpayer Clinic. He will introduce himself later in the program. And let's move along to our news flash. So we have been hearing far and wide from every side that the IRS is ramping up its collection efforts. That is to say that the IRS is clamping down, looking at, figuring out who owes money to the IRS and trying to get it from you if you owe money. Now, they're not going to call you. The IRS says this at all the times. Don't be scammed out of someone saying that they're calling you from the IRS. They're not going to call you. They're going to send you a series of notices. The problem is that some of the notices were stopped during the COVID pandemic. And because they were stopped, they were interrupted. You maybe have gotten one notice before, then they were stopped. Maybe you got 3 notices before. There's a series of notices, and they get more and more serious as the IRS moves along in its collection efforts. They're not going to try to collect from you out of your paycheck a month after you develop this balance. But if they keep asking you for the money and you don't respond, they will be able to levy against, say, a benefit like Social Security. That's what we're worried about. Or, of course, your wages, even your bank account in some cases. So read the notices, make sure the IRS has your correct address. And if you don't know what to do next, one thing you can do is we've made multiple Facebook Live presentations regarding collection alternatives, what you can do. If you owe the IRS and you can't pay it all right now, you can go on Facebook and on our website, on our Facebook page with Legal Aid of Arkansas, and you can find some of them to learn about the collection alternatives. You can call us, ask us about what to do about your collection problem, or you can bring us the notice, but don't delay because we don't want to hear from you after the IRS is levied on you. Pay attention to them because they are being more serious right now. So today we're going to talk about credits, and this is called the IRS Back to School Initiative. The IRS started this a couple weeks ago as school is starting across the country, and they're talking about family and education credits. They're trying to get the word out to everybody who might be eligible to start thinking about these credits. And they're trying to do this now. It's a little early. You're not preparing your tax return for this year. But by the time we get to, into the fall, people are ramping up for tax return preparation. So we want to talk to you about these credits and have, maybe your wheels turning. So the Back to School Initiative involves this publication 5844. The publication 5844 talks about these credits: earned income tax credit, additional tax credits. And then we're going to go through each of these, talk about those, and then we're going to talk to you about getting ready to prepare your tax return, which obviously can't happen until next January, but at a volunteer income tax assistance location. I am going to turn things over to my colleague and the newest attorney at Legal Aid, RG Earnest. Take it away, RG.
Thank you, Jennifer. Yes, as Jennifer said, my name is RG Earnest, and I am a staff attorney with the Low Income Taxpayer Clinic of Legal Aid of Arkansas. And on these next few slides, I'll be talking about just some of the different federal tax benefits that are out there for parents or families of children. So on this publication 5844, the IRS publishes a flyer, this 5844, and that publication basically is a one-page flyer that directs parents to the websites and QR codes that off of the IRS site that explain the various tax benefits that families are eligible for. It's a very handy tool. And if you click on the link there, it will take you to the publication 5844, which off of that publication, you can link up to these different sites on the IRS.
So if you squint really a lot, you can see that I have hovered over the publication name and it has the address there. And that is exactly what you would push to get to that site, which has several handy links, therefore, to the credits.
Very good. Yes, correct. And so moving on to the next slide, that publication talks at length, or the IRS site will talk at length about the earned income tax credit, or what we often call the EITC. And this credit is one of the more generous and common credits for parents to use. It provides a credit for taxpayers who earn money from working, which is most American families. It does phase out for higher income earners, so it is more designed to benefit low and moderate income working families. It's limited to income that you make from working. And so there might be other kinds of income like investment income and income from other sources that knock you out of eligibility for the credit. And the credit also varies in amount and availability depending on what your filing status is, say married, filing jointly, or head of household. It also
we have a question here.
Sure.
So I don't see married filing separate as a filing status. I actually happen to know that you can't do that to get EITC. So what do we do for those people?
Married filing separately? Well, I thought that
I usually just counsel them to see if they can file jointly.
Right. Yeah.
What is the reason for filing separate?
Right. And that's what I would do
separate
too.
Would, knock you out of
because in most instances, if whatever possible benefit you might receive by filing separately is going to be offset by the benefit of the earned income tax credit. So,
Okay, another question just came in. You were talking about earned income, and I know that people's filings change from year to year, and your income might change, your filing status might change. And this question came in and it said, if I didn't claim the EITC in previous years, but I mean, I was eligible, but I didn't know, can I still get the credit on this tax return?
yes, you can. And also, for those previous tax years, you could possibly amend your returns and claim the credit for those prior tax years as well.
But it's limited for how far back I can go.
Yes, it is. Yeah.
Okay.
So, and
Can't go
that's the
forever.
reason why it would be important and I think later on in this presentation, Jennifer, you mentioned that you'll be talking some about the free tax preparation services. And so that is in terms of figuring out what your limitations are for amending tax returns, these Vita clinics can be essential for that. Do we have any more questions?
Not right now.
Okay. Well, so I'll just keep on moving along then. As we discussed, the credit depends to some degree on your filing status. It can increase and decrease based on how many children you have. And as I'll talk about in the next slide, these children have to be qualifying children. But it is also worth noting that you may be eligible for the EITC credit and not have any children at all. And also on this slide, and similar to the previous slide, there is a link there under EITC assistant that will allow you to go to that to get a sense of whether you would be eligible for the EITC credit and how much.
But we did get another question now, which is an interesting question in relation to using the EITC assistant mid-year. Said, what if my income changes throughout the year? How does that impact my eligibility? That's a tricky question.
Yeah, your eligibility is going to be based on what your total end of year income is. And so it may be more difficult to get a sense based on the assistant of whether or not or how much and whether you're eligible or not. But that is also the reason why you may not be able to rely completely on the EITC assistant to figure out exactly what the amount of the credit would be and whether you're eligible.
Now, at legal aid, I think everyone knows at legal aid, we handle people who have controversies, they have legal problems. And sometimes the legal problem was they didn't include all of their income on their tax return. And so, unfortunately, for some of our clients, when they put in part of their income, they were eligible for EITC. But then when they put in all of their income, which they actually earned, we don't know why they left it off, then they got knocked out of EITC. And sometimes that means they've already gotten it and they have to pay it back. So these are the kind of cases we always urge people to be very careful when they prepare their tax returns, right? Are we going to the next slide?
Yeah, I'm ready for that, Jennifer.
Okay.
So we had mentioned in the previous slide that the EITC amount depends on the children that you have, but they of course have to be what are described under the IRS rules as qualifying children. And so it's not enough just to have a child that you may provide support. They have to be a qualifying child. And so this means that they do have to meet certain age requirements. They need to be under the age of 19 or under the age of 24 if they're a full-time student. And there are some exceptions to those age requirements if in the event that you may be caring for someone who is, or a child that is permanently or totally disabled. Um, the other qualifications as there's relationship qualifications. So you need to think in terms of um, sons, daughters, uh, grandkids, and even in instances, foster children and adopted children qualify as well. And finally, there's also residency requirements in that in order for to have a qualifying child, the child has to live with you for more than half of the year. And so it's important that for anyone who is going to claim any of these to claim these credits or claim children on their return is that they need to check off these boxes and make sure that they have met these qualification requirements.
So, RG, you said child, like a son or daughter, but then grandchildren, that sounds good, right? And we get a lot of clients whose grandchildren live with them. How about cousins?
No, that is not a familial relationship that is allowed for the EITC.
Okay. So
But
there
I
might be
believe
other credits that you can get for supporting a cousin, but not for EITC.
that's correct. And later on in our presentation, we will be talking about a few other credits that they have similar qualifications to the EITC, but they're not exactly the same. And that is what can make these tax credits tricky is that for the EITC, just because you might have someone who depends on you or someone who lives with you, that doesn't automatically make them eligible for an EITC credit.
Okay. Next slide.
Yeah. So this slide just summarizes some of what we've touched on already, but some of the main mistakes that people can make when they're filing for the EITC and how this can delay refunds. Um, One of those is incorrect filing status. You need to make sure that you're filing correctly. We talked earlier about married filing separately versus married filing jointly. Um, if you are going to claim head of household status, there are guidelines and rules about whether or not you can qualify as head of household. So if you file incorrectly, that can affect or delay the refund that you receive for the EITC. The other thing to consider is making sure that the Social Security numbers that you put down for your qualifying children are accurate. It's easy to transpose numbers. It's a 9-digit number, so you got to double check and triple check to make sure that those Social Security numbers are correct. Um, the other thing I think, Jennifer, that you'd mentioned earlier is the importance of making sure that you accurately report all of your income, because it's not uncommon for people to have more than one W-2 or more than one 1099, and that third party reporting will go to the IRS. And if the IRS sees a mismatch between what you have reported on your tax return as W-2 income or 1099 income, then that may delay your refund. And in fact, it can trigger an examination that, as you mentioned earlier, could possibly knock you out of eligibility for the EITC.
So we just got another question, and it's right
Sure.
on that. It says, what should can I still, we got two questions. Can I still claim the EITC if I'm self-employed?
Yes, you can. Again, going back to one of the requirements, you have to have earned income, but earned income is not just income from wages. it can be self-employment income as well.
Okay.
Was there another question?
But I'll wait till the next slide.
Okay, all right. And finally, on this slide, make sure that the children that you're claiming are actually qualifying children. Age, residency, those types of requirements. Sometimes, again, going back to mismatches, there can be instances where more than one taxpayer tries to claim the same child. And so you have to make sure that you've done this correctly. And so, so far we've just talked about the EITC credit. There are additional tax credits that parents can benefit from as well. And this slide here shows 3 of the main ones that you can get. And going back to what I said earlier, each of these credits has its own set of requirements and its own amounts and its own qualifications. So it's important that you make sure that you are properly qualifying for them. So the child tax credit is a common credit that parents of, typically school age kids are able to get. There are similarities between it and your qualifications for the EITC, but there are some differences too in terms of, say, age and relationship. Earned income is not required to receive the child tax credit. The
It has
American
you have to have income over $3,000, which is
Yeah.
an interesting little twist, because in 2021 you could get the child tax credit with 0 income, but then it reverted back and now it's $3,000. So it's a low threshold, but there's some income required.
Correct, exactly. The other 2 there are educational type of credits. The American Opportunity Tax Credit it's basically a credit that against expenses that parents or students might have for the cost of 2-year and 4-year degree programs. And it's maxed out at about $2,500 per student. The lifetime learning credit is a more expansive educational kind of credit in that it's not limited to the kinds of education that you'd have like a 2 or 4-year degree program, that it is more general than that to include many different types of educational training that a person might receive, say, after high school.
Again, going back to school. So
Right.
so we've already mentioned that free tax return preparation is available at what's called volunteer income tax assistance sites. They are all over the country, and they really are all over the state of Arkansas. If you haven't filed your tax return yet for 2023, there is some VITA. It's limited. It's open until the filing deadline, which is October 15th. That's the extended filing deadline. Normally, everybody files by April 15th, and that's when the VITA sites, usually 70 or so in the state of Arkansas, are open. We provide lists, we provide links, we provide phone numbers. We will do everything we can to hook you up with free tax return preparation. They don't open until January. They don't offer loans, but they're going to get you the biggest possible refund that you can get, because it's not going to cost you anything, nothing. They're going to give you a copy of the return. They're going to answer your questions. They're going to be there when you call back and say, where's my refund? And they're going to help you look it up. They're very, very helpful. They're not motivated by money. They're all volunteers. We will help you find one. And we had a question here that said, what should I do if I discover that I made an error on my tax return after I already filed it? And this is a really good time to answer that question, because now a lot of preparers are closed, including a lot of VITA. but we can hook you up with a place to amend your tax return. You don't want to make an error and then wait to see if the IRS catches it, because the IRS computers are very good at catching it. And when they catch it, you're liable for penalties. If you correct your own return before the IRS catches it, before you get a notice, before they say you made a mistake, then you're not subject to those penalties. So you save money by correcting your own mistakes. And because of the IRS computers, just don't assume that they're going to miss it. They're going to get it. I mean, the computers are going to catch it. So please call us with VITA questions. We start assembling the lists of VITA sites in January. However, we have VITA sites now for the just past filing season. And if you want to know where there were last year or this current year that are now closed, but are probably going to open in January, you can ask us now before we come up with that final list on next January. It's always a good conversation to have. So here is our phone number. Here is our website. Call us. There's no such thing as a stupid question. We really want to help you. There's our phone number. If you don't reach us, we have voicemail. We will call you back. We call back very promptly. And you can also, if you call this number and you know you have a problem, whether it's a tax problem or a contract problem or a housing problem, and you push 2 to apply for services, then you will get our intake people who will walk you through the process of becoming a client of Legal Aid, and we'll take it from there. If you had a tax problem, they'll send you right to us. So thanks for participating today. Tune into our next Facebook Live, which will obviously be in September since we're right at the end of August, and we will see you then.